Good morning. I just noticed I started talking, my mic was muted. So, late, what are you talking about? Only fashionably. You can hear me now, I assume, right? Okay. I've got this little mic, a mute button on my mic, and usually I plug it in early and I mute it so that I don't say anything stupid when I'm not paying attention and I'm actually being recorded, right? I mean, we all see people get caught on a hot mic, right? So, I always do that, and then sometimes I forget I get started and start talking, and nobody can hear me. So thanks for pointing out that you couldn't hear anything. So, um, yeah, kind of. Not 100% certain, but um, what was that? Give me just a sec here. Oh, okay, okay, that's what I thought it was for. I don't know where she's at. I just saw her as I was on the way here. She's sitting in the hallway. Hopefully, she doesn't get crazy and come in here and start being irritating because she can be. If I have food, she's obnoxious as all get out. So there we go. Okay. Well, welcome to Trading Coaches Playbook. If you're new here, appreciate you coming out, stop by and say hi and have a little fun. Kind of trying to get back to some of the basics here in the beginning of the year. So starting fresh and refreshing some of the old adages that always hold true no matter what. So um, let's get the disclaimer out of the way. As y'all know, I'm not a registered broker dealer investment advisor. I'm not going to give any recommendations or advice. Everything we do here is purely for educational purposes. So if we do talk about trades, just assume they are paper trades or practice trades. For regulatory reasons, we do not discuss funded trading. Of course, there is all the upcoming events. The premium online workshops. The inner circle is the 24th and March 3rd. Trade Watch Alerts Q&A, February 24th. What day? Okay, that's Monday. I was like, wait a minute. Yeah, that's on my calendar. All right, good. Mastermind group, February 25th. Trade U in March is the 3rd and the 17th. And Power Hour, free online workshops, Power Hour every Monday at noon. This one, Trading Coaches Playbook, every Friday at noon. Then Cash Flow Dominance is February 25th, 26th, 27th. You see the times there, noon, 8 and 8. And then Power Option Plays is every Monday and Thursday. Cover Call Explore with Trip on Thursdays, and E-Mini Think Tank with Brandon Monday, Wednesday, and Thursday. So that is what we've got coming up. Market's a little wild and crazy, huh? Sells off a little bit, then recovers, then sells off a little bit, and recovers. It looks like we're gonna have a retracement here for a bit, though, huh? So there's all the social media. There's TikTok. I don't know where the one was yesterday, but it was a shorter list. I was like, oh, we're missing TikTok. Did they shut it down? I don't even know. I don't get on TikTok, so. But if we haven't met, if you're not familiar with my stuff, I got Patterns and Flash was the first tool I created years ago for technical analysis, learning to recognize the patterns and knowing how to trade them, what to look for, what makes them stronger, what makes them weaker. So if you haven't had that, experience that. If you want to upgrade your technical analysis, that's a great tool. Weekly Whispers we added beginning of last year, I think it was. Basically, I'm like, I'm already doing all this analysis. Why not just take all my candidates every week and do a video? Got the software to do a video and record all my analysis of what I think and what my candidates are in the trades that I'm looking at for the week. So that's basically what that is. Once a week, it's about anywhere 30 to 60-minute video with all my candidates. We look at last week's candidates. We look at the overall market, look at the macro view, look at news coming up. Basically, just everything that I'm looking at for the next week and what trades I'm going to watch. So, and then I do an update midweek on Tuesday. So you get those the main ones you get Friday, and then the updates you get Wednesday. So I just record them usually Thursday night and Tuesday night. So, and then small account big return. Some of you may have had that. It's all about how to take a smaller account and grow it. That's the ultimate goal, right? So And then Trade Watch Alerts. We need to add that to this list, even though that was originally Amelia's, but she wanted to retire, so she asked me to take over for her. And so now I've been doing that for a while. So we are upgrading the members section. So I'm in the process of doing that right now. So if you already have Trade Watch Alerts, then stay tuned because that's coming. So you can see my style and what I do. And oh, that's awesome. Thanks, Alyssa. I like that. uh, she put all the links in there and then put the little hand thing. I don't know where to find all those things. That's cool. So yeah, we'll be upgrading that here hopefully the next few weeks. So stay tuned. But what are your top 5 indicators? I'm going to show you mine. Number one is price. Can anybody guess what number two is? Yep, that's right. Price. Number three. Yep, yep. And number five is volume. Pretty much, I'd say 98% of my decision comes off of price, maybe 95, 98, somewhere in there. I don't really have any way to quantify that, so I'm just guessing. As you know, the 73.427% of stats are made up on the spot. You knew that, right? Okay. Um, but yeah, the vast majority of my trading decisions are made simply off the price chart. Volume is another one that I look at, which is what we're going to talk about today. And the main reason is, I'll wait till they get the charts, but I'll forget by then. If you haven't noticed, I'm a little ADD. When you look at other indicators are not bad and they're fine. You can use them. They are all derivatives of price, though. Stochastics, MACD, RSI, everything is essentially a mathematical calculation that is designed to smooth out the price chart. And the purpose of them is to help in decision making processes as far as what is the price doing? What has the price done historically? And based on what it's done historically from the data, what might it do next? But if you understand how to read the price chart, then the indicators become less and less important. So a lot of times I don't even look at other indicators. I look at price, I look at volume. That's it. I analyze the price, analyze the volume. I don't even look through other stuff. Sometimes I do, sometimes I don't. It just varies. And there's no rhyme or reason. I don't have any specific rule that says go look at this indicator now. I'll show you when we get to the charts, but we're going to get there pretty quick actually because there's not volume's not extremely difficult, right? When it comes to just analyzing volume, it's actually extremely simple. If the price is going higher and the volume is either increasing or steadily solid, it doesn't necessarily have to be increasing, but if it's solid and it's staying at basically the average, the moving average volume or higher, that's a bullish sign. That means there's more people showing up to the party. There's more bulls, I should say, showing up to the party. If the price is going down, we've got lower lows and lower highs, right? A downtrend. And the volume is increasing, that is bearish. That means there's more bears coming to the party. And then if you have higher prices, if the price is going higher, but the volume is weak or decreasing, while the price may be bullish, there's less and less bulls coming to the party. So the bears are standing outside waiting, licking their chops, going, let's just wait for these bulls to not have anybody coming in there. We're going to pounce on them, right? However, you need to spin it in your head to make it make sense. And then the other one is if the price is going down, if we're getting lower lows and lower highs, a downtrend, in other words, and the volume's getting weaker or it's decreasing, that's actually bullish. Because now you've got less and less bears coming to the party, and the bulls are waiting outside, ready to charge once the bears get tired and there's no more showing up. I mean, hopefully that makes sense. If you have any questions, let me know. But That's, I mean, as far as volume goes, that's literally as simple as it gets. And if you haven't noticed, I mean, I'm extremely simple when it comes to my analysis. I don't do a whole bunch of fancy stuff. I look for patterns. I analyze the price chart. Are we in an uptrend, downtrend, long term, short term? It's extraordinarily simple, which it took me a good 15 years probably before I realized that that's really all you need. It's not, it's easy to come to the market, right? There's the old analogy you're drinking from a fire hydrant, and it's just overwhelming, right? There's so much information coming at you. And then eventually, what happens is you come full circle and realize that um, a lot of that information that you learned about was not really necessary. I learned a ton of stuff that I don't use at all today. And I went crazy off the deep end, like trying to calculate my own indicators. I was trying to plot stuff on charts just so I could figure things out. It was like, yeah, it was, and it's a good learning experience. It's not a bad thing to do those kinds of things because you learn something from it. But there you go, Brenda. You better be paying attention. Um, it's just like I said, it's not most of it's not necessary. So the list that says volume is more important than price, I don't remember seeing that. Now you're going to be obnoxious. The new one's the obnoxious one. It's made me appreciate how mellow this one is. Let me get back. Hold on a second, Barry. Let me get back to that. We're talking about this, right? Is this? Oh, um, where does this? I'm lost here. Where does it say that volume is more important than price? Did I typo something? I'm not seeing it. What do you mean? I wonder if it's a. Yeah, I'm not sure what you mean, Barry. Bullish versus bearish. You said volume is more important than price. That is not accurate. So if I said that, that's not what I meant. No, volume is not more important than price. But when you comparing, if you're looking at price and volume together, analyzing the two of them, right? If price is going higher and volume is increasing, then that means there's more bulls coming to the party, right? If the price is going down and the volume is increasing, that's bearish. So we're talking interpretation. Is that what I'm seeing? Understanding the way you're interpreting it is different than what I said. That's what I'm hoping. I'm hoping I didn't misspeak. Well, here, let's go to the charts actually, because it should make a little more sense. And this is the bigger picture is kind of what I'm planning to get to. Um, Let me get back to my list real quick here. See if we can give you some real world practical visual. It's not a great example. Let's see if we got one. Trying to find one that's a little more. There was a trying to find something that's a little more dramatic so it's easier to see. Okay, there's a decent one. Well, let's see if the fall of volume. Well, it depends on what it's doing. But here, let me just keep going here. Then hopefully I'll clarify just by explaining this. So here's Blackstone, right? If you look, if we look at the price versus the volume, I'll put some vertical lens on here. So right there in this rally, right, you see the volume where the volume is increasing along with the price. So the price is going up, volume is going up. That's a very bullish indication, right? That indicates that there's more bulls coming to the party. And then we have right here where we sold off heavily. The volume was increasing as it dropped for 3 days. That is technically bearish. which I'm sure was some profit taking and possibly there was news. I'm guessing that was probably some kind of news right there, which is no surprise. You get a spike in volume. So that may not be the best of spots to look at. But then you'll go back here and you look at each of these moves. You look at this, 5 or 6 or 7 day move, and look at the volume. The volume was increasing for 5 of those days. And for the following 3 days, it was solid. So this is a bullish indication. Now, let me take those off because now I just noticed this. Take this section right here and drop that line in the middle. So this section right here, the price is dropping. And what's the volume doing if you look down below? And make that a little bigger so it's a little easier to see. The volume is actually going down. Right? If you just look at the peaks in the lines, you could draw a trend line in it if you wanted to, but during that, inside that box, as that price is going down, the volume is also going down, which is bullish. Because there's not as much selling as there was before. So it's dropping. The price is dropping, but it's not selling off heavily. Because back here, right, it sold off heavily for 3 days. Again, I think that's maybe not a great example because it's news driven. But if we come back to the current time and you look at here, you got 3 days of a giant volume spike, and the stock has been dropping. And we've got now, in the short term at least, over 3 or 4 or 5 months, we've got lower highs and lower lows. So we are technically in a downtrend in the short, maybe intermediate term, depending on your time frame. And volume is accelerating to the downside with an increase. That is bearish. So the price is dropping, volume's increasing, bearish. Here the price was dropping, but the volume was also dropping, so the selling pressure was not as intense. So here, a week or two ago, we had heavy selling, intense selling, means the bears are in control. Back here, the selling was really light. Even though the bears were winning, there were less and less of them coming to the party. And then eventually you can see what happened is that, boom, it spiked, and the bulls came back in and took over. And the volume spiked again, which created enough momentum to create another push to the upside. Is that helping, Barry? Hopefully it makes sense. I think at least these two parts, as far as the dropping and it's the inverse though if you're talking bullish. So price is dropping, volume is dropping. That's actually bullish because the bears aren't pushing as hard. Okay, good. Good. That's the goal. Because I know this it gets a little confusing at first, and once you get it, and sometimes I forget that I've been at this for 25 years, and so, but yeah, it's the exact opposite when it comes to the bullish side. So it is essentially just looking and seeing how much volume there is relative to what the price action is doing. So you'll get it. It's not, I mean, it's not super complicated, but it's like calls and puts. When you first learn calls and puts, what do? Calls are easy. Buy low, sell high. But then all of a sudden puts, it's like, wait a minute. How does this work? I buy something, the stock goes down, and my put goes up and I make money? It's hard to wrap your brain around, right? And this is not much different. So it does take a minute. You just have to keep going. Just it's like anything in trading. Anything you learn is you just got to keep trucking at it. So that leads me to I'm trying to learn Spanish or get better at it. I know a little bit of Spanish, but so I got this app and I'm going through these lessons, and it's irritating because some of the basic stuff I don't like, the easy stuff like I have, I want, those things, which are a lot of the conversation. I somehow either missed all that or they didn't have it in there. And I'm on like the second or third step of these lessons. And it's like, and I'm getting frustrated because it's like, I don't understand what's going on here. But I just keep pushing through. It's like, it's not making sense right now. It's not coming together. But I know if I just keep on going, keep studying, keep learning, I'll figure it out. So it's, yeah. So I understand. It's, the learning process is not always fun. It's not easy, and it can be messy. So anyway, I'm glad that we're clear on that. So, but here's where it gets interesting. This was part of the reason this topic came up is, and I know some of you are going to be shocked when you hear me say that my long-term perspective is bearish. Not as bearish as it was a few months ago. I think short term that the new administration is still going to have some bumps. There's certain things that have been put in place that aren't going to change no matter who's in the White House. I think some of the long-term policies that are being the policies, some of the policies that are being put in place, some of the things that are being done, I think are long-term good for the country economically. So agree or disagree with who the administration is. The things that the actions they're taking, the things they're doing, especially from a financial perspective, is good for the economy overall. There's so much fraud and waste and abuse and everything else. And for my entire lifetime, politicians have been promising we're going to get rid of it. Everyone from both sides of the aisle. Oh, we need to get rid of fraud, waste, and abuse. All of them have. Every single one. I can't remember a time, even when I was a kid. Remember my dad. We used to sit and eat dinner. He'd watch the news. He'd come home from work. We sat and watch the news while we ate dinner. We weren't allowed to talk. It's like my brother and I start talking. It's like, shut up, watching the news. So, but he was always complaining about it too. It's like they always say they're going to cut fraud, waste, and abuse. And finally, we have a president that's actually doing it. So, again, whether you like him or not, at least he's doing what he said he was going to do. So they've all said it, but none of them have acted on it. So, anyway, I'm not supposed to go politics. But like I said, I think short term, there's a lot of storms brewing, a lot of things that could happen that he's going to have no control over and can't do anything about. I think that's what's more likely to happen. But I think, like I said, I think long term it's going to be good. Oh, good, Jennifer. Yeah, I know. I was trying to come up with examples that, uh, yeah, it's just learning in general is frustrating until you get to the place where you understand it well. So I've spoken just a tiny bit of Spanish for a long time, but my neighbor's learning it. His wife's from Venezuela, and he's learning it, and we're both learning it together essentially. So, um, here's where I can't use that because the volume's weird on it. So we're looking at the spiders the other day, and again, this is where this topic came from. And if you look at this, well, let's just go. What just happened there? There we go. So if you look at the volume here, okay, obviously the trend is higher. And that blue line on the volume is a 21-day moving average, which is basically 21 days is a month of trading days. 21 or 22, depending on who you talk to. It's not going to be a whole lot different. But notice that it is dropping off, right? The trend, the blue line is trending lower, and it has been for 6 months. And I looked back and I go, back in October, September, we were at about 55 million shares a day. On the far right, I don't know if you can see that or not. It's probably pretty small on your screen, but 54.3 million where my mouse is. So it basically looks like it peaked out about 55 million. And you see right now we're at 26 million a day. That's just the average. This is on the spiders. The SPX, the volume is not accurate for some reason. But this is essentially the same thing. So we've literally in 6 months gone from 50 million shares a day, 55 million shares a day down to 26. That's a 50% cut in how much volume the market's doing. And when I started backing out of this, let me kill that. It got really interesting. Because if you go back to when this trend started, you can see that trend started right there in, what was that, September or October, end of October, essentially. We were at 90 million shares. 90 million shares a day are trading hands on the spiders. And we're now at 26. That's a 70% drop in volume. And when you look at the descent of volume, even though the price is going higher, this just adds to my bearishness because I know, like, what? You're bearish? Yeah, I have been for 2 or 3 years. since 21 or something like that. Even though the market has been bullish, which is really a lot of it, when you look at the breadth, is concentrated in just a handful of stocks, right? You've got the Mag 7 that account for, was it 27 or 37%? But whatever it is, they account for the vast majority of this rally. There's a lot of stocks that have been in downtrends since 2020 and 21, especially 21. After the COVID rally that went crazy, in 21, a lot of stocks peaked out and they dropped and they've never recovered. Obviously, it's not the masses, but good question, Tom. Well, if we go back to the basics of what we said in the very beginning as far as volume, if price is going higher and volume is going lower, that's bearish. The bulls are still showing up to the party. This thing's still going higher. The party's still raging as far as they're concerned. But in September, October of 23, there was 50 showing up every hour. Now there's only 20. 50 people were coming to the party every single hour. Hey, more people at the party. The party's getting bigger. It's growing, it's growing, it's growing. And the party's still growing a little bit, but at a lot slower pace. So there's only 20 people coming. 20 bulls are showing up to the party. And you know darn well there's a few bears just waiting outside the door. As soon as the bulls start coming out the back door, we're going to pounce on them and start eating them. Like I said, maybe not a great analogy, but make it work in your head. But here's where, if we go even further and start to look at, in fact, I think it's easier on a weekly chart. This is where I thought it got really intriguing. So you go back here, this is '07. I wonder if it would be easier on a semi-log scale. Yeah, actually, that does kind of make it easier. So, right, here's '08, the big crash. You'll notice, well, interesting enough here, at least looking at this is a weekly chart. So there's the bottom after the dot-com bubble crash, '09. Beautiful inverted head and shoulders. Hint, hint. Watch for patterns. And then we rally. And you can see, actually, if you're looking at the blue line, the moving average line, it's actually steadily increasing the entire time. But watch this. Let's see where. I don't know if I can do that from down there. Yeah, I can. Okay. Even though it's hard to see here, let me do this, drag this up and see how much better it will look. Okay, that's a little better. And obviously, it's not super dramatic. And it looks like it peaked out right there about August of '06. And it started to drop off. Is that right? I'm assuming that's adjusted for splits or something, but basically about 400 million a day. Have the spiders split? Did they split this? I don't think they split it, did they? I don't know. It just seems like 400 million is a lot. But then again, maybe not compared to what we're doing now. I guess not. And that's even crazier. In June of 22, right there where we have that little peak, it's at 500 million a day. Oh, this is a week. That's right. This is a week. Okay, and we're at 160 million a week. Okay, that's why. That's why the number's so high. It's a weekly number. Forgetting where I'm at. But anyway, we go from about 400 million down to 300, 315 million. So we dropped about 20 or 30% of volume as it continued to rally. You can see, I know it's hard because there's not a lot of time there, but the market continued to rally, but the volume dropped off. And then, interestingly enough, is even as it rallied into the volume really spiked a lot there, which may have been where that's where it's hard. I wonder if we should let's do that. I just realized that we can do this. I do this so little. Okay, we're still on a weekly. I think that'll be good. Oh yeah, okay, that's better. That's a lot better. So yeah, it's not a huge drop. Again, it's 400 million down to about 300. So it drops about 25% of volume, even though it's rallying. And then the volume really started to accelerate actually into the peak, which is really interesting, actually. But then you can see it accelerated big time as the spiders fell. And this is where the bears were in control, and you can see by the increase in volume. And it's interesting. I don't think I've never gone back and looked at it like this from a volume perspective. It's interesting that it was rallying. I mean, the volume was increasing dramatically during this last phase of the rally, which kind of makes sense because it could be that euphoric stage and a little bit of capitulation going on there. Like, hey, here we go. But you can see when it started to fall, the volume not only stayed high, but it accelerated as the panic set in. And then things calmed down. We had kind of a capitulation move right there, one more leg to the downside, and then boom, we bounced, inverted head and shoulders. Wink, wink. But you can see the volume then dropped off pretty dramatically over, well, I mean, it's for about a year. For about the next year, it dropped off, right? Because people weren't selling. The sellers all got taken out. So it makes sense that the volume would drop pretty dramatically after a huge sell-off like this. A big panic, everybody's bailing. They're not coming back into the market. And then it looks like that's where it gets interesting. If you start to drop some lines on there, you see when it gets complacent, we have the market rallies, volume's dropping off, and then what happens? Boom, a sell-off. Volume spikes there again. Pretty certain that we have the same thing here. Yep. Right. So the price is going higher and the volume is drifting lower. And then panic sets in, a retracement, whatever you want to call it. This is probably not a panic. This one is a pretty quick drop, but it's not like we had back here, right? That's just a cliff dive right there. Like we went out. Swan dive. But so what is typical is that we get a rally, the bulls start to lose steam, right? They don't come in with as much volume. And shortly thereafter, it will retrace. And you can see since that point, this is was that 2011? It dropped off pretty heavy, and then it's retraced, and you can see the volume's been relatively steady the whole time, moving up. I mean, we're only in 15 or 16 there, but there's another one. We take some of these peaks and draw some lines on there, and you've got, a nice solid rally going in place, and the volume this one's drifting lower. It's not dramatic, but it's definitely going down where, here we are in January of 2013 at 623 million. And by August of 14, we're at 400 million. What was that again? 600 million. So yeah, we got a 30% drop in volume over a 2.5, 3 year period, however long that was. And then boom, it sells off. Now, it's not a dramatic drop again, but it's a little bit bigger than the other little pullbacks. We've had these healthy corrections. But again, there's another one. I mean, that's the bounce back, but that one doesn't really have, I mean, the volume is kind of static there. But again, there's, a bull run, volume is getting lighter, and then you get this pullback, big spike in volume on the pullback, which is no surprise. Same thing here, right? We get a continued rally. That's 2017, 2018. Yeah, that's basically about 6 months of 2018. You can see the volume dried up dramatically, and then boom, it drops off. Little rally here, volume's drying up. That's 2020. So kind of an anomaly, but at the same time, it's the way the market goes, right? But you can see as it rallies, the volume is getting lighter and lighter. So the bulls are losing steam. So something eventually is bound to happen when that, something will cause the market to retrace. I shouldn't say will, but is likely to. The odds are. So now we come back to current time, and you can see, there's the COVID bounce. It rallies big time. Volume was actually pretty steady during that time. But you'll actually notice that it increased when it started to sell off. That's 22, right? Yeah, that's the beginning of 22 when we had a small bear market for a year. But again, and this volume is kind of an anomaly because you have the COVID panic sell off, but then you have people come back in and people start trading and they start buying because they have money. Government's just helicoptering money into the economy. I mean, my neighbor's a bartender. He was making more sitting at home than he was working. He was loving it. So, and he started playing in the market. A lot of people, millions of people did. What else are they going to do? You can't work. You stuck in your house. Let's trade, right? Some of you might be some of those people, right? Or you got into the market because of that. You had nothing else to do. You can only watch so much TV, right? So volume stayed steady for the most part. But then when it did start to get bearish, you can see it increased. The bears were partying and winning. And then when it shifted gears in October, when Powell came out and said, "Hey, we're gonna stop raising rates," then we turned bullish. And the interesting part, this is why the drop off is dramatic now. It's not small. Most of these other ones we just looked at, right? They're relatively small declines in volume. I mean, here's one. This is back in, was that 16, 17? That's a pretty steep decline. I don't know if there's anything, well, I mean, this one right here, but that was a massive peak though, too, that we were at. But there's a crazy thing. I mean, look at relatively speaking from the volumes we have, we're at 160 million. We haven't been this low as far as volume on the spiders since 2004. Interesting. I didn't see that, but this is still a weekly chart. But again, you can see the very steep deceleration of volume dropping off big time, even more than this. This was just a steady decline. Here, we've not only had a steady decline, but we've had an acceleration in the last few months. Since May of last year, the volume has dropped off. I mean, just May of last year, we were at 338, 340, which is, yeah, more than double. We dropped 50% in the last 6 months. Did I hear anything about Buffett selling his shares of the spider? I didn't know he owned the spiders. I know he owns Apple. He cut his stake in half on Apple. Bank of America, I think he took 80% of it out. I don't know if they're part of the spiders or not. But yeah, that'd be surprising to hear that he had a position in the spiders. But he might. I mean, it's possible. I don't, but even that, I mean, I don't think that would account for the drop in volume we have. It's a massive drop. So going back to Tom's question, was a super long answer to a really simple question. But at the same time, I want you to see the full context of like this is why this is another thing right now that's pointing to we're bearish. I mean, could it keep dropping and could the market keep going higher and the volume keep getting less and less and less? Yeah. Could it turn around? Could the volume change and we get a spike in bullishness and we have another huge leg to the upside, a big spike to the upside? Typically, but you can see the pattern that the volume drops off and then eventually there's a sell off. The question is, how big is the sell off? How long does it last? And there's always the anomalies, right? But just like back here, you got a pretty significant decrease, and then boom, big spike in volume. I don't know how big the sell off was. It was 273 to 247, a low about 240, so about 30 points, a 15%, about a 15% retracement on the spiders, 10 or 15 somewhere in there, right there on that one in the middle and 18. But they say I saw that and I'm like, woo. So I think it's just one more red flag, one more giant red flag that this market is not as strong as people are saying it is. I mean, it's obviously the price is strong, but there ain't a lot of bulls coming to the party. There's less and less and less, and they are dropping off quickly. They're exiting the room. So, another one, I think last time I did this, I was talking about being on the bearish side of the market. I would rather be in bearish trades. If I have 20 candidates, if half are bullish, half are bearish, even though they're not. Most of my candidates I have are bearish, and they have been for 2 years, even though this market's been raging north. Most of my candidates have been bearish. Last year, I went back and looked. 86% of my trades were bearish. Actually, I still have that here. I keep meaning to delete it because it's irritating me. That one right there. If we go back to the 24. Long trades. Wait, what's going on here? That's not right. That's weird. Why is it showing that? I don't know what's going on. This is not. That's super weird. I hope they didn't delete my stuff before I downloaded it. Oh, no, that wouldn't be good. I meant to download it and save the PDFs. That's what I did last year. So I had, because I always worry about this. So I have backups, but it's not showing. And I've deleted all my backups. That's weird. I'm going to have to go figure that out and see where it went. I hope it didn't disappear. Because, yeah, this was actually 137, I think it was, or 132. That's last year's Weekly Whispers account, the trades I did for the Weekly Whispers. So And it's designed to mimic $100,000 account. I know it says a million, but in Omega charts, you can't trade options with it. I mean, they have quotes in there, but it doesn't trigger them. So I basically mimicked because you get about a 10-to-1 leverage with options, right? So I created an account that was 10 times the size that I would be using. I'd be using a $100,000 account. So I had to make it a million to mimic the $100,000 account. And I just do this trades with the stock as if it's an option. So if I was going to do 10 contracts, I just do 1,000 shares. Hopefully that makes sense. So just a simple translation, just to use that system. But yeah, 86% of the trades I did last year were bearish trades. And when you have the odds getting higher and higher, every single time we get a rally, it increases the odds of some kind of retracement at some point. So I would much rather be on the bearish side of the market, considering that, in my opinion, the odds are higher that it's going to go down. We're going to have a sell off, just like we did back here. I mean, if you're in a bullish trade on this day right here, you're probably not very happy. You're in a bearish trade? Hey, there we go. Right? So, considering my macro view is bearish, I would prefer to focus on my bearish trades. So, going back to, I have 20 trades, I have 10 bullish candidates, 10 bearish candidates. I'm going to favor the bearish candidates much more than the bullish candidates. If I get into a bullish trade, I'm going to babysit that thing a lot more and have the stops tighter. I'm going to peel out. I'm going to scale out of it sooner and faster than I would on a bearish candidate. Bearish candidates, I might even hang on a little bit longer. I might put a looser stop because, in my opinion, the market is going to drop at some point. That's the hard part, is we don't know when. And like I said, I'd rather lean on that side because if it does, or when it does, then I'm already there. So, is there an app that paper trades options? I mean, on Toss I can, and I tried it. I did that last year actually, because I wanted to find out if the what I was doing on Trade Nav, because it's not as precise as I like it. I'm super OCD and I want things exact. And so for the first like 4 or 5 months of last year, I was mimicking the trades on Toss in their system on the practice platform, and doing the same thing as I was with on Trade Nav or Omega charts. And then, of course, Toss switched over to, it went from, who was it with before, Ameritrade to Schwab. They deleted everything. All the practice trades, everything that was in there, my whole history was gone. I was not happy with them. Like, I messed up. What is going on? Where's all my stuff? Oh, well, it wiped it all out when they did the transition. Yeah, that's what I said too. I was not happy because it's like, this is all my stuff. And had I known that, I could have downloaded it, backed it up, and then uploaded it into there to keep the data. Or at least I would have had the data stored there. So yeah, I was very flustered with that because I had 4 to 6 months of it. But what I realized is that the numbers were about the same. So even in here, and I can't remember, I mean, I was up in this account, that's it's a little deceiving because it looks like $1 million, and 120 or $130,000 of profit for $1 million account is not that big of a deal. It's 13%. But my options trades in that account, I was up, I think 25 or 30 grand at that time. I don't remember what it was, but it was basically the same profit in the practice account on Toss as it was in here from a numbers perspective. So yeah, woulda, shoulda, coulda, Brenda. I also should have taken my profit on gold this morning. I would have made double what I already made. And I should have gotten back in. Right? Watch that woulda, shoulda, coulda. I harp on that all the time because it's easy. Easy to say woulda, shoulda, coulda. I mean, if we would have known, I would have bought an NSTR back when it was $50 because it went to what, 500 or 1,000 or whatever. Hindsight is always 2020. So, any questions at all on the volume part? Then, thank you, Jennifer. Honestly, I'd never seen that. I just noticed it the other day, Tuesday, when I was doing my I think it was Tuesday, or maybe it was last Thursday when I was doing my midweek update, or might have been my weekly whispers update last week. And I happened to see that. I happened to zoom out for some reason on this, and I went, "Whoa, that's dramatic. It's a dramatic drop, right?" So all of a sudden, I'm like, "Hey, you know what?" And when you take the human ego, what does it do? You all know confirmation bias, right? See, I'm already bearish. That's a confirmation of what I already believe, which is something that is good to be aware of. See, obviously, I mean, it's top of mind for me because I always think about it. It's like, am I seeing that because I want to see it because my deeper belief is this, or is that really truly something I should be paying attention to? You know what I mean? So it's really easy to get caught up in that confirmation bias and be like, well, this is what I believe. It happens all the times in politics. I already believe this, and that's what a lot of people do. My brother loved him to death, but when it comes to politics, he's got a massive confirmation bias. He believes X, Y, and Z, and if you give him facts that discredit and say that's not accurate, what you believe is not based on fact. You're entitled to believe it if you want. It's just not based on reality. Here's the reality. And he doesn't believe it. He just shoves the reality off to the side. No, I don't want to believe that. Because he doesn't want to believe it. I mean, it's human nature. We all do it. The question is, are you aware of it and can you beat it or not? And that's what you've got to be careful of, especially when it comes to trading. Because I recognized it years ago, didn't know what it was called. I think it was 2001 or 2002. I bought calls on Intel. And as a rookie trader, I didn't put a stop in. I was taught to, but I didn't. It was like, all right, let's just go with it. I know it's going to go up because my ego's there, right? I knew it was going to go up because I did my analysis. I looked at the chart and it's going to do what I think it's going to do because I looked at the chart and there's a support there. And it has to go up because there's a support there. That was my mindset. If I draw a line, it can't go below it. Stock doesn't care about you. Sorry. Don't want to burst your bubble, but that's the reality. But I remember I'm upside down. I'm way underwater, losing my shirt, and CNBC's running in the background. I remember I was in this trading room in Vegas, and some news story came out about Intel about some new product they were launching or this or that. And I got all excited. I'm like, sweet, that's going to make my stock go up. It went down. But I wanted to hear good news about Apple or about Intel because I wanted it to go up and I wanted to be right. I wanted my analysis to be right. I wanted to be confirmed, hence confirmation bias. I wanted my belief to be confirmed. I wanted the stock to do that for me. You've probably all experienced it unless you're new to trading. If you haven't experienced it, you will if you start paying attention. You will recognize yourself when something does what you want it to. And I still get it. I mean, it still happens. It's never going to go away. I mean, I had last week and a half, I had a killer run. And I was in a great mood. I'm like, yeah, everything's good because right, you have a whole bunch of profitable trades in a row. You're on a streak. It's like sweet. You get all excited, and your mind starts going places that it probably shouldn't. Right? You start shopping for new houses. You're ordering the Benz, doing all this stuff in your mind. And if you don't remember that the market can come and whack you at any second, even if you're doing the right things, because that's what happened to me just this week. So last week, and for about a week and a half, I tore it up. And then this week, I had a couple of trades that just, I gave a lot back. And it wasn't that I did anything wrong. It just, they went against me. And that happens. It wasn't a bad trade. It just, they didn't go as planned. And so all of a sudden that, it kind of bursts your bubble. It's like, oh, so you got to remember, you got to constantly keep your ego in check. You got to constantly watch for those emotional signals. Talking about indicators, if you want to know the best indicators, is your own emotion. Pay attention to how you're feeling in the moment. If you're panicking and freaking out, that's probably a bad time to make a decision. Whether it's, going in your favor or going against you. If you're like, oh, I don't want to lose my profit. It's not a bad decision to take profit. But if you're freaking out and panicking, like, it's dropping. I'm up $5 and it's dropping. It just dropped $1. I just gave $1 back. Take a deep breath. If you really need to, then take part of your position out. And if it makes sense, then take it all out. That's what one I had yesterday was irritating because I was down a few $100 and I ended up getting in, did a mean reversion, looking for it to bounce because it looked like it was really oversold. I think it's going to bounce, but I've done that before and got my head handed to me. But this time it bounced. And I was like, you know what? I'll still be down for the day, but I'll be down less than I was before. And I think the down move could continue. So I'm going to take my profit here. Instead of just letting my plan trade out and play out, I wouldn't say I panicked out, but my emotions got the best of me. And if I'd have waited 30 minutes, I would have gone from down $300 to up $300 in about 30 minutes. $600 reversal, just like that. But at the same time, it wasn't necessarily a bad decision because I've been in the same shoes where I didn't do that and it turned over and continued to fall and I lost even more. So it's easy to second guess and say, well, what if I did this? I should have done this. Again, the woulda, shoulda, coulda syndrome. It wasn't that it was a bad decision. I just wish I would have stuck with it. But I didn't. So here's what it is, right? And there's the challenge to trading. Because you never know in the moment if it's the right decision. But you make the best one that you can and let things play out as they may. Because again, you're gonna wind up on both sides of those where you don't get out, you don't take your little bit of profit, and then it turns and you get wiped out or you get beat up real bad. And other times you're like, I should have stayed in. It's an emotional roller coaster ride. But learn to pay attention to your emotions. And that's one reason I scale, because in that situation, what I should have done is taken out just half the position and left the other half there. And then I would have ended up breaking even for the day. That's the main reason I scale as much as I do. Getting in or getting out in chunks. Because these days, commissions are virtually nothing. They're so small, they're inconsequential. So, yeah, Rowan, I just saw your comment. So I was like, wait a minute. Goes below the line, start believing the market sees your lines. Yeah. The mind is a crazy place. And it's easy to deceive ourselves to believe things that may or may not be true. Hence the reason that it's important to constantly be self-reflecting. And that's the beauty of trading. It's a good and bad of trading. Trading will absolutely expose your fears and your weaknesses because the market does not care what you think, what you're scared of, what your opinion is. None of that matters to the market. It's its own animal. It's going to do its own thing, regardless of what your opinion is. So, and that's, for some of us, it's hard to overcome that hurdle. And that is the challenge of trading, is being able to recognize the mental side and the emotional side of trading, and then learn to recognize it in yourself. And when you see it, you've got to work to correct it. And even at 25 years, and I'm 4 or 5 weeks away from 25-year anniversary. It's April 3rd and 4th of 2000. And it's a constant challenge, is managing the emotions in a way that allows you to stay continually, for the trend of your account to grow, right? You're going to have retracements. You're going to be up. You're going to be down. You're going to have some winners. You're going to have some losers. But the goal is to have your stock, or have your account look just like this stock chart, right? You're going to go have some days you just, you have a week or two. Hey, I'm doing well. Then you give a little bit back. Then you going well again. You get a little bit back, and then here you get euphoric. That's when you got to be careful. When you get euphoric and excited, and I did this last week. I'm like, I was on cloud nine. I'm like, I'm having one of the best weeks I've had in a while. And in my mind, I'm like, and I got to beat myself up, like smack myself, because if you don't smack yourself, the market will. Right? If you don't humble yourself, the market will humble you real quick. So when you start to get euphoric in your mind, you start to go, oh, I've got this figured out. No, you don't. The market will show you real quick that you don't have it figured out. And then you get one of these, right? These big giant drops in your account are not fun. but they're going to happen just like the market does, right? This is literally what your account should look like. And obviously the goal is, no matter what market conditions are, is to get it to grow like this. But you're going to have that where you're going to get blitzed. That's where I'm frustrated now. I can't believe that 24 is gone. Because I could show you well, I guess I can go back to 23. I show you the monthly numbers. Something like 4 out of the 12 months accounted for like 80 or 90% of the profits. The other months were like, up $5,000, down $8,000. I don't think I had any big giant losing months. But the winning months that were big, 50 grand or something like that, 40 grand, 30 grand, 25 grand, and lose 5,000. And when you look at the chart, it looks a lot like this with some big losers. So that is normal, that's natural, and that's learning to accept that and recognize that you're going to have those drawdowns. You're not going to have a straight line up because not only are you going to have trades go against you, you're going to do stupid stuff, which we all do. I still do sometimes. The goal should be to minimize the stupid decisions, minimize the mistakes that you make. Losing money on a trade isn't a mistake. It's not a bad trade. It's one thing I go into in Patterns and Flash. Many of you have probably heard that. If you have a plan going into the trade, you know what your risk is, you're comfortable with your risk, and you trade the plan based on what your plan actually was, and you don't deviate from it, whether you made money or lost money doesn't matter. If you lost money on it, it was still a good trade. Because if you're using risk reward properly, if you have a 3-to-1 or 4-to-1 risk reward ratio, over a series of trades, you're going to have ultimately big winners and little losers. If you win $3 on 40% of your trades, you're going to be way ahead. All you got to do is run the numbers on that to see that. So, but once you realize that and recognize that a good trade is having a good solid plan that's statistically advantageous, that puts the odds on your side. And if you stick to that plan over and over and over again, then you should come out ahead in the long term. So, like I say, I placed good trades on these other ones that I lost money on earlier this week. They were good trades. There wasn't anything wrong with what I did. They just didn't do what I thought they would. And one of them was big. One of them was, well, I took more risk than normal. I decided, you know what, this is a good time to take a bigger swing at it, right? I'm going to swing for the fences on this one because the setup's nice. And it didn't work out, and I got hit bigger than normal. But I do that occasionally, right? If the setup is right, then it makes sense to put more risk on the table. Just like I learned in blackjack when I was young I learned blackjack when I was 16 because I expressed some interest. And my dad hands me a book, the world's greatest blackjack book, says, here, read this. Read up to page 200 and forget the rest. So that's what I did. When you're done with it, come see me. And we sat down, he showed me how to count and all this stuff. And it was, where was I going with that? I just lost my train of thought. The risk. Gosh, where was it with that? It'll come back to me after we're done, I'm sure. Yeah, exactly, Brenda. And usually you're wrong quickly, right? If a stock stops you out, I know I was going down the risk reward path. Yeah, that's a good point, market. Roman, market. Roman says that I learned that the market has no grace. And that is absolutely truth. It is ruthless. Has no grace, has no forgiveness. It was realistically, it's an inanimate object, right? It doesn't do anything. So, why did I bring up the blackjack thing? Now it's going to drive me nuts. But the world's greatest blackjack book. So yeah, it's good. Oh yeah, the plan. Yeah, the plan. That's what it was. I know it's starting to come back to me a little bit, but whatever you do is, I mean, you have a plan. I mean, blackjack is a static game. There's only 52 cards in the deck, and there's only a certain amount of things that can come out, right? So you learn the basic concepts of odds and when to stay, when to hit, then you're basically break even with a house. Then you learn a simple counting system, which is not hard to do at all, and you have an advantage over the house. You have the odds on your side against the house. So, I don't remember if that's where I was going with it or not, but yeah, you notice she's coming down here saying hi. Trying to get one more little view in. You can say hi? Yeah, Trixie. Somebody was asking her name, but so she's a little crazy. Actually, she's the calm one. She's 2 years old now, though. The kitten is annoying. She's a foodie. She comes over. I had to throw her in the bathroom yesterday because she just wouldn't leave me alone. I was trying to eat, and she just comes sticking her face on my plate, trying to eat my food. Taffy. So, but that's it for the day. So I gotta call it. The market is starting to sell off pretty heavy, actually. There's if you're not watching it, I'll bring this down here real quick. You can see there's I don't know how well you can see that, but the one on the left is the 5 minute chart, right? So yeah, market, you can see all four markets. I got the SPX, the Nasdaq, the Dow, and the Russell. They're all selling off. The Russell, you can see down there's the right. Russell's down huge. Holy, that's over 2% already, which is no surprise. And frankly, I'm loving this right now. Hence the reason I like to stay on the bear side of the market, because when days like this come, it's a good day. So get out of my face. Yeah, Brenda, sure. Close enough. Yeah, we'll go with that. So thanks, Roman. You too. I don't know when Trump's supposed to speak. He's always speaking. It's the opposite of what we used to have. It's one thing that's nice. At least we have some communication. That's love him or hate him. And, I don't love everything he does, just like anybody. There were some things that Biden did that I didn't mind or I liked, and other things that I couldn't stand that he did. And, same thing with Trump. They're all, nobody, how many of you love your spouse like that? You love every single thing about your spouse? There's probably something they do that irritate the heck out of you, right? You love them to death, but they do this, and it's like, why do they do that? I mean, nobody loves somebody that much where you love every single thing they do. So it's no different with politicians. I don't understand why people don't understand that. It's like, I like some things they do, and I lean one way, but I prefer a certain type of government. So anyway, I'll call it a day before I say anything else. Not that it matters. I mean, in the old days, we used to have debates and conversations about politics, and we could still go out and have a beer and be friends. And, it was a respectful debate. And unfortunately, we've devolved into this, win or lose. It's an all or nothing. I hate you if you don't agree with me type of mentality. So, yeah, Tom, but I bet you there's at least one or two things you can name about her that drives you nuts, right? There's got to be at least one thing. She doesn't put the toothpaste cap on, right? Yeah, that was the point. Is that you love somebody to death, but there's always something that they're going to do that irritate you. Same thing with politicians, and that's the all or nothing thing I don't understand, because I don't love everything Trump does. I didn't love much of what Biden did, but there were some things he did that I was in agreement with. So anyway, but yeah, like I said, the sad reality is we can't even talk about it. Even though we may disagree, we can have a respectful debate. But anyway, that's why I don't care. See, I'm not very good at being PC. If you haven't noticed, I don't I don't walk that line. I mean, I'm not going to intentionally do something insane, even though sometimes I do. But it's I'm not into that whole thing. I'm about as authentic as you can get. I just say it like it is most of the time. I mean, you got to use some tact, and I can't be totally crazy here, but I don't. I'm honest, stupidly honest, according to an attorney from years ago. So anyway, we're over now. So um, give the advanced tool and draw the plan. But I just realized that this is real time right now. Actually, it's 15 minutes behind. But what plan? This one? That one? Oh, that's a little big. Yeah, that thing's beautiful. I love that. That's why I love Omega charts. All righty, we got to call it a day. Thanks for hanging out, having some fun, giving me some laughs. So y'all have a good weekend. God bless. Bye bye for now.